Hello everyone. China's president recently concluded his well-publicized trip to Saudi Arabia. Gulf countries are moving away from dependence on US in general, and on US dollar and US military in particular. Let's talk. China's President Xi Jinping said on Friday that China and Gulf nations should make full use of the Shanghai Petroleum and Gas Exchange as a platform to carry out Yuan settlement of oil and gas trade. This statement has a lot packed into it. First, let's look into the trading platform Chinese president is talking about. As we all know, most of the oil is traded on well-established Western markets, like NYMEX. These markets offer high liquidity and are based on well-defined oil standards, or benchmarks, like West Texas Intermediate or WTI or Brent. Oil benchmark is basically a standardized unit that describes quantity and chemical composition of a tradable lot of oil. Buyers and sellers can clearly know what is being sold, and that allows them to price it efficiently and build entire financial infrastructure around. This infrastructure includes trading platforms, like regulated exchanges and clearing systems, insurance, lending, storage and physical delivery options. All of the above is very important, because refineries are built around very specific types of crude and whole economic structures are built around that. There are few other minor oil markets, like the one in Dubai, but these offer fewer features and are much less important in the grand scale of world oil trade. We might see some brand new energy markets, like the proposed new oil benchmark in Russia, but it is still being developed. One important aspect of oil trade on Western marketplaces is that oil, like all other commodities, is priced in US dollars. This scheme gives the US dollar a huge advantage and keeps demand for the US dollar very high. This is actually a cornerstone of the whole financial pyramid called the US economy. Commodities are traded in dollars and US dollars are recycled into US treasuries, funding US deficits. China, like some other nations, has been working hard to diversify away from its dependency on US dollar. It does make sense. Concerns about the use of US dollar have been growing louder, given unmanageable US debt and aggressive foreign policy of use what is supposed to be a neutral payment instrument as a tool of economic warfare. Why use third parties' currency and be subjected to all these risks, while you can use your own currency? Or, at the very least, a currency based on some neutral assets, like commodities or international financial instruments, like some version of SDR which is not controlled by US? This is where the Shanghai Petroleum and Gas Exchange comes in, and the opening statement by the Chinese president takes on a particular importance. In 2018, China launched its own oil futures trading platform. It is still a regional oil marketplace which has a long way to go to be able to take on NYMEX, but the growth rate of Chinese commodity markets is phenomenal. In 2021, year-over-year growth of trading volume on Shanghai Energy Exchange exceeded 30%. Shanghai is now featuring a fully developed and liquid market of oil futures and options, storage facilities to store oil and gas and other infrastructure necessary to conduct the trade on a large scale. But the main reason Beijing is doing it, is that all trading and pricing is done in Yuan. Here is where the main challenge to the US dollar lies. As Reuters reported, platform to carry out Yuan settlement of oil and gas trade. This is why this shift by the Saudis might be very impactful. China is the biggest oil importer in the world. In 1971, US was a major importer of Gulf oil. That, coupled with a pragmatic divide and conquer strategy, allowed the US to install the US dollar as a main world currency. China is the main customer for the Saudis and most commodity exporters. It gives China a big negotiating advantage. We can buy from you in Yuan and you can use Yuan to buy our products, or we can buy it from someone else. This is a win-win situation for most parties. Today you have to obtain US dollars, and as dollar becomes more and more expensive, most importers struggle. If you buy goods from China and sell raw commodities to China, you have everything to gain by moving away from US dollar. It helps countries to stabilize their currencies and reduce geopolitical risks related to a possibility of sanctions or seizures of their reserves. For decades, US was using Western trading platforms priced in dollars and US military to maintain control of international trade. But with the rise of regional powers and alternatives to US-centered institutions, it will be increasingly difficult for US to maintain control. It is not widely discussed in the mainstream media, but the trend of de-dollarization is steadily gaining momentum. Just take a look at holdings of US treasuries by foreign banks and governments. As you can see, the amount of treasuries held by foreigners in 2022 decreased by $500 billion. Now, think about the whole US dollar as a reserve currency notion. Countries are selling goods and commodities and store proceeds in US treasuries. Reserve currency scheme works because US has a liquid bond market. Let me know in the comments what do you think might happen to US dollar if US bond market went, what's called, no bid, when buyers just evaporated and Fed had no choice but to bail out the entire bond market, Just like the bond market in UK recently. Biggest reduction of investments into US Treasuries came from, not surprisingly, China and Hong Kong. These two countries can be easily considered as one entity since they are under the same control. Move by China away from US Treasuries and US dollar might be happening due to geopolitical reasons. Another big seller of treasuries was Japan. Japan is a better example of how dependence on the US dollar can hurt the economy. Energy is denominated in US dollars, and as prices of gas and oil skyrocketed, strong dollar compounded energy costs, forcing Japan to dip into its treasury reserves to prop up its currency. High energy imports and strong US dollar turned a positive trade balance into a deficit. By the way, while foreign holdings of US Treasuries shrunk, approximately equivalent amounts of gold were purchased. Let me know in the comments if you think there is a connection. Another notable statement by the President of China was China will also establish bilateral investment and economic cooperation working mechanisms, carry out local currency swap cooperation, and deepen digital currency cooperation. As we all know, China is a leader in digital CBDC adoption. Domestic use of digital yuan is well beyond the point of testing, with adoption growing year over year. But the statement indicates that China is ready to start dollar replacement in bilateral or local, as Chinese leader called it, trade between Saudi and China. So as you see, Chinese ambitions go beyond just pricing oil in yuan. China is working on a mechanism of direct trade in national currencies, sidestepping dollars completely. And this is the main point of the whole article the way I see it. China is working on establishing a network of bilateral trade agreements that are isolated from US influence and avoid the US dollar, Western payment infrastructure, like Federal Reserve or SWIFT and so forth. World is moving away from US dollar. China is not the only country trying to reform international trade. The same trends can be seen in actions taken by many countries around the globe. Time will tell if they will succeed, but given the history, all reserve currencies follow the same fate. Adoption, widespread use, and eventual decline. The US dollar is unlikely to be an exception, at least not based on what we see. Now the main question all of us should be considering: what will happen to US dollar domestically if US dollar loses its reserve currency status, and how we can protect ourselves and people we care about. Please subscribe if you would like to be notified when new content comes out. Thank you for watching, until next time. And, if you are still here, I would suggest you search for a difference in reception of Biden by Saudi, compared to a warm welcome with honors and festivities for President Xi Jinping.